before we get into this evening's live, I want to go into a quick overview of what is transpiring. Right now, with what happened with the CPI data, as things came in a little bit different than they expected, I believe this paves the way for an interest rate cut in June. So I think that that's the big thing to talk about. We have that. We'll show exactly what was said in about a 3-minute clip. I'm going to show something from Bloomberg that'll help identify what's going on. We had Franklin Templeton file for, I believe it's the 17th XRP ETF. So there's going to be a price surge. It's inevitable. It's going to happen at some point. The question is which layer is it going to happen at? Is this the time where we bounce off of 220 and we start bouncing out of here? Do we still need to go farther down to $1.50? These are all things we're going to talk about. And we're going to actually look at this in a little deeper fashion, not just with XRP, but what it means with the interest rates, what it means with a few other scenarios that are starting to develop here. But I do have we have the extreme fear in the market, so I'm going to give you the contrarian view of why it should go up instead of down. And I've talked about this. When you're in extreme fear and when you're in fear and extreme fear, it is not the time to sell. That is the time to start accumulating in that whatever you're looking at, if you can find the proper area. Now, I know it's very difficult because at the same time as saying that, that doesn't look the greatest, but there's a lot of things that, well, look, even with the case going on, the key fact today, the SEC's case against Ripple Labs is nearing its end. Currently in appeal after 125 million ruling, yada, yada, yada. So, you know, that's something to pay attention to, as well as this is going to come to an end eventually here. We know it's not a security, but the let's call it the punitive part of this lawsuit is eventually going to come to the end as well. So it's just something we're going to pay attention to here. And then I do want to talk about what happened with the CPI data. We've got XRP looking like it's coming towards a real nice close here above 220.5. It's looking pretty good here. The one thing that still is, it's hard because we have the daily time frame. We have this bearish cross, but in the 4-hour time frame, so we're starting to work in lower areas. We've gotten back on top of the 20-day. Now we look to be making a push up towards the 200, which is up at 243. Now, you can't just go there unabated. It can't just happen unabated. Because we have to pass that, what is this in real time? $2. So if we hold $2.20.5, we have to get above $2.32. And this is something that is honestly unavoidable. We have to get past that resistance, but we also have to hold this support. Otherwise, we could find ourselves in an area where it's not so comfortable if we were to fall back down. But honestly, the way it's all transpired today, I don't feel bad about this. I mean, I'm going to be honest, I don't feel bad about this. Like the way it's setting up, I don't feel bad. The way that the CPI went, it's exactly what we want to hear going in to June. If you're looking for a rate cut, that's just, it's the way it goes. You know, we've got to do it step by step. But it's something. I also I want to put this on here real quick. Whoops. And nobody's probably going to know what this is, but I want to add this for a reason. Eaton Vance. Let's see. Got to find the right one, though. Hold on. Vancer FD. I'll explain this in a sec. Here we go. I believe it's EEIAX. Let me just make sure. Because there's so many that are similar. But if you are watching right now, please make sure to hit that like button. I promise you, we're going to get into this very deep. It's just, I'm going to show you just something that I do on top of just the traditional that I always show everybody. But I want to add this onto the list for a reason. But what does everybody think about what happened with the CPI data? Were you surprised at the direction it's going, or was it pretty much what you were to expect? Like for me, I didn't see anything that, oh, there we go. That's what it was. I knew something didn't look right. It's EADOX. There we go. So this is the Eaton Vance Emerging Markets Fund. And this is one that I put contributions towards. And I do I do something to kind of work against all of the income that's, well, it's delayed. That's the one thing you have to, it's delayed, so we're not going to get it in real time. But anyhow, I have, like, I trade crypto. I also trade commodities and obviously precious metals, but I also have another portfolio that has the emerging markets. And this is the one that I went with. It's a, let's say it's a more volatile, I don't want to say volatile, but they go out on a farther limb. So $7,000 a year in the traditional IRA you can write off as contribution, so it comes off your bottom line. So like in 14 or 24, 7,000, 2025 will be 7. I'm just throwing that into the emerging markets, and then you can write it off your bottom line. So, you know, obviously with an IRA, but it's got to sit there for so many years. But that's a tax thing. So plus you collect on so much in dividends as well. So that's one that I really, really like. I really, really like. But that's, most of you, that's not going to even resonate. So Marco, welcome in, and thank you for the $5.49 donation. Also being part of Tom's Army. I really appreciate that. Along with McMichael, both of you in Tom's Army for more than 3 months at the XP Meteor. Tom, have you ever used TradingView Super Trend Indicator? I have not. I have not, Mr. Page. Syrian, welcome in. I really appreciate you being a very trusted mod, and also being in Tom's Army for over 6 months with the XP Predictor, along with many others in Tom's Army here. Joseph and Jennifer Kupiak are both here, brother and sister, believe it or not. It's awesome. Both in Tom's Army for their 2nd month. I really, really appreciate that. Awesome group we have here. Awesome, awesome group. I seen Crypto Scrooge, welcome in, my friend. Been a very long time. Good to see you still in Tom's Army for over 3 years with the XRP Diamond Hands badge. It's always good to see you, my friend. Always good to see you. And I appreciate everybody who's continuing to stick it out, even though I'm not home and I'm having house renovations. It even gets worse next week because I agreed to the next step with my carpets, my floors. They're going to put on 6 new doors on the inside, do all my moldings and bases, switch out my lights, paint, and do all this stuff. So that's going to start next week while they're waiting for the countertop. So it's going to be a very busy, let me repeat, a very busy and weird time here. Tanya, welcome in. I really appreciate seeing you in here as well. I've been in Tom's Army for over 2 years with the XP 589 Moon badge. Shane, welcome in. Always great to see you in here, friend. Love seeing you in here. John Patak, welcome in, and thanks for being in Tom's Army for over 1 year with the I Told You So badge. I want everybody, though, to pay attention to that emerging markets fund. Pays a dividend. It's a nice fund. Just pay attention to that. $7,000 a year I'm contributing to it just for tax write-off purposes. They say the rich get richer, and they say, like, Trump and all these people don't pay taxes. That's not true. They just know how to marginalize what they have to pay. So I try to teach you all tricks of the trade that I've learned. See, this is something you'd have to pay a financial advisor to find that emerging market. But I've done my research on my own. And actually, if you look up my fund that I've been in, it's actually outperforming most of the emerging markets. So I think it's like the number 6 rated for the emerging markets, but it's had the number 1 return in the last calendar year. So, but I've had 7,000 in contributions in 24. I'm doing another 7,000 this year towards that same fund, and that's going to be my 1/3 portfolio makeup. So I have, well, 1/4. I have commodities, precious metals, crypto, and emerging markets. So that's how I roll. But with that being said, we've got so much to talk about that the heck with the emerging markets. Probably nobody cares in my audience. Maybe somebody does. But if I can help one person and open your eyes to something, that's good enough for me. So good evening. 6:16 p.m. Eastern Standard Time on this Wednesday, March 12th, 2025. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So I think the first place to start is for anybody who's in here. If you didn't see what happened with the CPI data, let's just get a quick rundown here.
Welcome back, Squawk. We are just seconds away now from February CPI. Rick Santelli standing by at the CME in Chicago. Rick, the numbers.
Yes, boy, this is a biggie. This is our February read. Consumer Price Index expected up 0.3, comes in a tenth light, up 0.2%. and in the rearview mirror, at least now, not revised, and up 0.5%, by the way, was a 2-year high we're reversing from. Up 0.2 equals where we were.
Oh yeah, and Canada cut interest rates by 25 basis points. I seen that today as well. So Canada did do a 25 basis point rate cut.
In October to find a lower number, you're back to July of last year. Strip out the important food and energy, it remains up 0.2 on core. That's following up 0.4, which was the highest level since Feb of 23. 0.2, well, we equaled Dec of last year. Find a lower number, you're in June of last year. Year over year, a headline number, 2.9 expected, 2.8 is what we get. Last look was 3%. 2.8 to find a lower number. You're in November of last year when it was 2.7. And do remember that cycle at the end of last year, we actually saw 2.4 on the September read, just to put a face on the fact that we have been lower. And if you look at X food and energy or core year over year, 3.1. 3.2 was what we were expecting. 3.3 in the rearview mirror. 3.3 in the rearview mirror was the highest since May of last year. 3.1, to find a smaller number, you have to really go into the Wayback Machine. You're going to April of 21 when it was 3%. Now, I know many don't look at the following, but if you look at the actual index.
Sean, thank you. I'll continue this. Sean said, Tommy, have set a great example by paying off your mortgage and living debt-free. Almost no one does that. I am following. No, you're right. Not a lot of people do that. I'm following you to my goal of no debt and no mortgage. Thank you. You're welcome, Sean. Yeah, I work opposite of like what Robert Kiyosaki and a lot of people teach. I like what Dave Ramsey teaches, the debt-free living and getting ahead. And yeah, I like speculation like crypto, and I like speculation like commodities, and I love having stability in the precious metals. But I also like the security as well. After you start getting out of debt and doing some certain things, like some of my money had to go towards house renovation as well. But I also like the idea of like having a CD that pays 3.5 to 4% on a certain amount of money, because that's every 2 months so on 15 grand, it doesn't seem like a lot, but in 2 months I'll get up 580 bucks roughly. I'll reinvest that and keep doing it, and that, you know, it compounds on it. So that's just something I'm trying to do. And the emerging markets thing is something I truly believe in. I've talked about it for a few years, but I finally found the fund I wanted late last year. And it's just, yeah, I really like Dave Ramsey. He gets a lot of slack from a lot of people but he literally, that's the stress-free living is not having any debt. I don't care what anybody says. It's nerve-wracking when you have debt, even if it's under control, like controlled debt. What happens if the market all of a sudden reverses and now that debt you have for real estate, it goes upside down? You always have to pay those property taxes when you own real estate. So you better hope that you've got some kind of income coming in. That's why I don't like taking out debt. I would rather not. I'd rather be broke as hell and not have to take out debt and then have it over the top. That's just the way I feel.
Of CPI that goes back to 1913. Right now we have 319.082. That's another all-time high.
Excellent, Syrian.
Back to 1913. If you look at core, that was started in 1957. It comes in at 325.47, and guess what? Another new all-time forever high. Go use that inflation tool.
They're definitely going to cut rates in June. I have no doubt about that.
Website, and what you'll find is inflation's running over 20% on a compounded basis going back to pre-COVID. Interest rates initially moved lower as they looked at the month-over-month numbers. You know that parlor game, you analyze these numbers, but in the end, they're still sticky. And just to point out something, our last look, still unrevised, these inflation numbers were hot last time, unlike today where they're a bit cooler. And what happened? We settled on February 12th, the last time January CPI was out, at 463 in a 10-year. It was the high water mark. Hot inflation, all we've done since is go lower. And the reason I point that out is there's a lot of moving parts pushing yields around these days. Andrew, back to you.
There was one more that I wanted to look, because I don't like just looking at one set of data. I like to look at, where's the other one that I seen? Oh, the newest one right here. So remember, I showed you the one from this morning, and now this one's another one, just a slightly different view from NBC News instead of just having it from Bloomberg.
Breaking economic data, we've got new numbers out this morning on inflation. They show inflation is looking a little better than was expected. The consumer price index rose 2.8% in February. That's the year-over-year number. Inflation is up 0.2% on a month-over-month basis. NBC News business and data correspondent Brian Chung joined us now to break down the numbers. Brian, first let's talk big picture. Walk us through those big numbers, how they compare with what we saw at the very beginning of the year.
Yeah, good morning, Joe. The inflation numbers not only show a sign of improvement, but actually breaks a multi-month streak of rising inflation, which we hadn't wanted to see. As you mentioned, 2.8%, that's how much prices rose in America between February of this year and February of last year. That is down from 3% that we got as a reading in January. And as you can see, breaks that streak since basically the fall last year of a rising rate of inflation. Although I want to still point out that the inflation rate that economists say is healthy is still somewhere closer to 2%. So a lot more work to do on that front. But again, what economists were expecting going into this report was 2.9% around here. So again, that number coming in a little bit low, below estimates, certainly welcome news. And actually, you're seeing stock market futures trade.
How is 2.9% up there? That's 3.1 where he circled. Is he out of his mind? I'll tell you, they'll tell you anything to confuse you. Like 2%, they made up that number when interest rates were at 0% because they thought they needed to raise it up so that we could get screwed over a little bit. Like, it's a bizarro world we live in with these guys. I'll tell you what. Look at that. We finally broke the uptrend. What is he talking about? You mean that little blip that went down to 2.8 instead of 3?
Higher, implying that the market open could be green, which would be welcome news after that slide that we've seen on Wall Street the past few days.
Yeah, no kidding. So let's break it down by category. Where are we seeing some of the biggest hikes?
Yeah, so when it comes to just the breakout of these categories, food, energy, and shelter, these are not the monthly changes that we're talking about here. So between January and February, food prices did go up, but they went up by 0.2%. That's a slower pace than the 0.4% we saw in the month prior. That's welcome news. Same story with energy prices. It rose by just 1% entirely in the month of January. It only went up by, again, 0.2% in the month of February. And then shelter costs, this is the biggest one for most Americans, just putting a roof.
Yeah, but look at this. They're not even over 12 months. That's an additional 2.4% you're paying for food, an additional 2.4% you're paying for energy. If this just continues, even at 0.2%, that's still
over your head. It increased by 0.4% between December and January. It slowed to just 0.3%.
So that's 3.6% more you're paying for shelter in 1 year. Like,
contributing to the fact.
Do you see how ridiculous this is? They're celebrating because it went up 0.3%. That's still. Does anybody understand? That's 3.6% it's going to cost you for your housing over the top in 1 calendar year. That's 2.4% on food and so now in 12 months, assuming it even stays that slow, you'd have 2.4% more in the next 1 year on food and energy. You'd have 3.6% on shelter. How is that a good thing? So now I got to pay 3.6% more on my housing and 2.4% on food and energy more in the next 1 year. That's what you have to look forward to based on these numbers. And those are ridiculous. Those are going to get redacted anyhow, and they're going to go up. It's just, I don't understand how they rationalize this. They drive me nuts. So that's as much as I can take of that. So let's get into what's happening with, well, I did mention this, so I just wanted you to see I'm not fluffing it. But Bank of Canada cuts interest rates, calling trade war with U.S. a new crisis and warning of severe impact. 25 basis points they cut. But listen, to my Canadian friends out there, they're dicking you around right now. Bank of Canada cuts rate, calling trade war with U.S. a new crisis. It's not a crisis because had Canada have done nothing and just let the U.S. raise rates or the tariffs to 25% on Canada, has no effect on Canadian citizens. That's the big bullshit story here. It doesn't. Only the U.S. would pay 25% more. Now, because the Canadian citizens think that their leaders are actually doing something by imposing their own tariff, now they have to pay. Welcome to the fun. Don't be tricked because of uneducation. And I'm not talking about schooling education. I'm talking about real education. They don't teach you this shit in school for a reason. They want you dumb, minute, and oblivious. It's my new thing. Dumb, oblivious, and irrelevant. That should be what it is. Now, if you want to talk about something good for XRP, so XRP price surges as Franklin Templeton, I did fail to see the price surge, joins ETF race, rally incoming. So XRP has experienced a significant 3.6% price surge following Franklin Templeton's application for a spot XRP exchange-traded fund. The massive asset manager, and this is why I was excited about this, they oversee $1.5 trillion in investments, joined 16 other financial institutions, making them number 17 to seek approval for an XRP-based exchange-traded fund, signaling growing institutional interest in the cryptocurrency. Wall Street giants flock to XRP as ETF applications pile up. Franklin Templeton's entry into the XRP ETF race represents a major development for the cryptocurrency. With its enormous $1.5 trillion in assets under management, the firm's interest has triggered immediate positive market reactions, pushing XRP's price upward by 3.6%. The total number of asset managers pursuing XRP spot ETFs has now reached an impressive 17. UB2B, welcome in, my friend, my meme genius in the house. 3 years plus in Tom's Army at the XRP Diamond Hands band. It's amazing. We're only 2 weeks from today, or what is it, the 24th? Somewhere around 2 weeks away from 4 years here on YouTube. Kurt, welcome in. Jorge, good evening, and thanks for being in Tom's Army for your over 3 months with the XRP Meteor and being a very trusted mod. Define Group, good evening. Yes, they are, Tom. Believe me, it's oh, it is terrible. It's awful. Demonstrating substantial institutional enthusiasm from Wall Street entities. And now with Franklin Templeton files S1 registration statement for spot XRP ETF. That's now 17, and we can go over the list again. We talked about it yesterday, but now we get to add Franklin Templeton. 1 to 17, Bitwise XRP ETF, Grayscale ETF, 21 shares Core XRP Trust ETF, Canary Capital and Wisdom Tree. So you have XRP ETF and XRP Fund, CoinShares XRP ETF, along with Invesco, VanEck, Fidelity, ARK Invest, Galaxy Digital, Pro Shares, Hashdex. Volatility shares are all XRP ETFs, and you have Volatility shares 2x XRP ETF. That's basically a 2x ETF, which means it's levered, and it moves at twice the pace. Volatility shares minus 1x, that's an inverse ETF, which means it's basically you're counting on the price to go down. And then 17 is Franklin Templeton XRP ETF. So approval of these ETFs could potentially unleash significant capital flows in XRP, which would in turn boost its price potential in the coming weeks. So I just wanted everybody to see that. So good with that, good with that. We've still got the Crypto Fear and Greed Index at 19. A spectacular area. I love it. Crypto Cruise, honestly, no clue. If I had to guess, I'd have to say it makes much more sense to go up instead of down. I like where the Crypto Fear and Greed Index is too, in extreme fear. That's guiding my direction as well, thinking that we're way more bullish than it appears on the surface. Not everything is faring in a bullish sense. You've got BGB down about, 2.1%. We've got XDC, which continues to fall on, basically trip on itself and bash its head through the cement. And now it's bleeding out, down to 6.6 cents. But there should be a reversal here at some point. I wouldn't be surprised if it would have come down here to 6 cents even. But at any point, it really could reverse back down. Some of them did come down to that exhaustion wick. I'm glad to see, though, XRP playing out in this fashion. Up 2.91% right now. We're up over that major pivot point. Notice we had a big problem there. But it's over that major pivot point. And now it's up over 220.5. Now, yes, in time, we could come up to near that 247, 246. But we still have to get over this area at 232. We can't do anything else. We're trapped right now. We're in between the 220.5 support and the 232 resistance in the short term. And once we pass that, then we can start talking about moving up near 245, 246. But we still need to break out of this very key zone. So it's nice to bounce off of where we have. But yes, I seen Shane make a comment. We do have a fair value gap at $1.50. Doesn't mean it has to hit there, but it is in the area. It is in the area. So it's going to be something. I see someone says my bag is an XCN. To each their own, my friend. There's a lot of people in here in this community that believe in XCN, so you're not alone. But just going on the basis of XRP here, when we look at the XRP market cap, we have actually pushed over that resistance as well. We're right on it right now. But we're on the top side of 129.29 billion. That would open up the door, and it doesn't seem like a lot, but it's another $3 billion to get back up above that resistance area. because we created these symmetrical triangles, it almost looks like here. So, I mean, you definitely want to rectify the situation, so to say. So that's a big area, because if we got on top of there, then you're talking about possibly doubling the XRP market cap here. So, I mean, if you're talking about the illusion of doubling this, here, hold on. Here's this right here. If you want to put something on. So you definitely have the illusion here of a doubling up on the market cap if we could somehow stay on top of this pivot layer and use this, but we haven't so far. Now, I understand that you could look at this slightly different, and we've talked about it before, but I hold a lot of value in the fact that we did have that uptrend, and instead of doing something like this, I still like to show the other area, but it's obvious. It's pretty obvious that we could be forming this, right? The stationary support now. So that's why I have it set up. But with the touchdown, you could certainly look at it like that, and it would evolve the pattern a little bit. Now, I would suggest, if we're going to look at it like this, to come down at the highest point and then just revalue it like this, just so that we don't have to go all the way up there initially. But you see what this would do. You see how this could react if we did break out of here. You know, you could have a very big reaction. Now, it's going to depend. This would be like succeeding by the end of March. But we'll see, because if it breaks down from here, that's irrelevant. If it breaks down and gets rejected, then you're going to come all the way back down to almost like 100 billion. And then if that breaks, I mean, for every action, there's a reaction. Or for every non-action, there's going to be an opposite reaction. And you see how this would come down right down to that support down below? So, I mean, that would be devastating. And that would be the cycle rejection. So, but I'm not ready to look at that yet. I'm not ready to look at it that way. Something just seems like it's got more to do. It's got more to do. I just cashed all my XCN for profit to have dry powder. If it dips, I buy more X. I don't understand. What do you mean you sold your XCN? Where the heck did you buy it? I'm just curious. Like, did you buy it on that initial dip? Like the drop that it just had, and then you bought it after that massive drop? I'm a little confused. I don't know how you... I'm perplexed here. How I don't understand. Where would you have sold it right here? I'm just trying to get I'm trying to get acclimated to what you just said so that I can watch this for you. We're definitely up. I don't understand. My bags are... That's what I was going to say. XCN to sell. This wasn't the time to sell it. If you were buying it, this is the time from the drop. It actually hit our resistance. It just didn't make it up to the top part. But this followed it absolutely perfect. It's down 72% right now from the top. I'm sorry if I sound stupid, but I fail to see. I need to know the parameter here. I would love to know the parameter. Because I'm not going to think too deep into it. It's not my portfolio. I was wondering where that buy-in and sell was, if I'm being honest. Maybe I'm being too nosy. Because I'm going to be honest. I think this formed like some kind of descending wedge or something. Maybe... I don't know. I don't want to say too much because I don't know. I don't know this particular buy and sell. Gold and silver bullion, commodities. Love the news today. Love the news. Expect the silver miners were up as well. Let's see. First Majestic. Fortuna Silver Mines was up another 5.12%, up to $5.34 on the day. It's banging now. If we get out of this section, oh buddy. Oh buddy. We do. One could argue that we might have an ascending wedge starting, but you know, we'll see this as it goes on. But we're in a much larger pattern. I'm just starting to. I'm just watching this. It's been a very long time. Earnings got hammered all across the board when you look at this. 81% miss on earnings, but things are starting to ramp up. On that Monday drop, I even bought more B2 gold when the market looked really red. So, but yeah, Digibyte. I bought 100,000 more Digibyte the other day. A little lower than where it's at now. Obviously, it failed up here though. But before that rally, we had bought a little bit more. Same Shane. Before that breakout, I bought too a little bit more. There's just so much stuff here. The XRP Bitcoin pairing is up 2.22%. And it's trying to still play this inverse head and shoulders. I mean, we've been talking about this for a very long time. That is like a cup and handle technically formed here, trying to form. Break out of this descending wedge. And like that's massive implications here if we could just break out. We're so close. We are so close right now. If this actually happened, this would be like wave 4 would be complete. Now we could actually get this wave 5 out of here, but we'll see. It's got a long ways to go. Don't think we're anywhere close to where we need to get just yet. We're basically in no man's land because we've had that massive drop, and now we've gotten over the dead cat bounce area, assuming we can hold 220.5 for XRP. That's the make it or break it zone. That is the make it or break it zone. So it's something here. It's definitely something to watch this develop. We've seen what was supposedly Baron Trump's, but I don't know because it never got validated. I highly doubt it was. But there was a massive 50x trade taken out on Ethereum. That whole thing got liquidated earlier. The whole thing, or that whole position got liquidated. Liquidation was at 1,800 because they had put more in the cross margin because they had a 50x. And it came through 1,800 big time. Big time. Came down to 1,750. So unless they expanded that 50x, horrible decision. I said it earlier, that 50x, you might as well just hand your money in. That's a horrible decision. Especially in this market, why would you lever up 50x? 10x would have been wiser. Have that same cross margin, it probably would have been down near 1,300 with all the money they had in there. It's just a horrible, it was right on this pivot point. That's a horrible trade, whoever did that. You'd be more inclined after a drop like that. But anyhow, John Patek, thank you so much for the $4.99 donation and being in Tom's Army for one of your 20th donation. That's unbelievable. I like XDC, but it's beaten up. It's getting destroyed, obliterated. It's in a broadening wedge, so we just have to watch this play through. Now, if it breaks that broadening wedge down here at 6 cents, it's going to be a long road back down in half. I can't remember the exact amount that was in that trade. Let me go to the Telegram. Let's see. Let's see if we can find it. Somebody shared it this morning, and I kept it in there. Like, I didn't... Right here. It was... $272,409,929.53. It was a 50x trade. So they had margin available, and the liquidation was at 1805. That's not where it would have been on a traditional 50x trade, but they had a cross margin open, and that was for 141,000 Ethereum. So it came well below 1805. So somebody lost 272 million on that leverage trade, assuming, you know, that they didn't close it or anything, and it doesn't look like they did, if I'm being honest. So that's just brutal. It's brutal, but there's no reason for that. I'm just saying, there is no reason for that kind of stuff. Like, why waste your money, especially if you have that much money? It just doesn't seem right. And this is the whale that was liquidated. See that? That's that position. Liquidation. That's a crazy. That's crazy. They just lost that. That is a crazy amount of money on a trade like that. That doesn't even make sense. Whoever traded that has no inclination of what's going on in the market. And that should be a valuable lesson to everybody who watches me about leverage trading and why I hate it. Look at that. That's $272.4 million loss on it. Who the hell would take that trade? I don't understand. And they were up $4,000. I don't understand. Wait a minute. 4 point. Does that say they were up 4,000 or 4 million? I think they were up $4 million. But yeah, that's a brutal liquidation. And then it caused the price to just tumble down. I think it was right around 1,750 for Ethereum. But it's Frankie, algo is killing you. I mean, a lot of people are getting killed because they didn't buy it before the run up. A lot of people didn't buy algo until it was in the, well, most people bought it in the 40s and 30 cents now. But there's support structures I've had out here. 17.3 cents is a big one that it came down and hit. If that breaks, I mean, you could be talking about a total reset. But it does look like we might get a little bit of a relief bounce here. But we'll see. Can't really lose that structure right now. Can't afford to lose that structure. I could argue that maybe it was more like this. And then it ended up forming something like that. Descending wedge kind of, and now it's on the backside. But yeah, I mean, there's a lot of optics here right now, that's for sure. That's wider patterns, but we're trying to see if this is finally the culmination point of where we could have some kind of breakout here, maybe. It's been a long time coming, though, I'll tell you that much. Something like that, I kind of feel like. It's hard to see it, but it's something like that. I don't know. I'm a little optimistic here, to be honest. I'm a little optimistic here. Let's see. I did buy more MXC, as some of you know. Where the hell is MXC? Right here. I doubled my position. Couldn't resist. So I have 2 million tokens, but there's no guarantee this holds. You know, this has been a very long, drawn-out consolidate. I mean, very. And it's right at, the problem is here, if it falls through this, it's right at the all-time cycle uptrend. So, like, it really can't afford to go anywhere from here. If it does, we're going to make, we've already made, you know, we're making new lows here. So, going all the way back to 2019, that's the levels we're at right now. These are the kind that get me intrigued. Not the ones that have already moved up. Not the ones that have already had this big breakout. Like XCN had a big break. I'm not interested in that. I'd rather try to hone in on something. And I'm not saying don't buy it. I'm just saying I'm trying to hone in on things that are still so severely undervalued. And, you know, it's still within that range of buy. Anywhere from 1.9, 2.2, 2.3 and down. And now if it does break down this wall, it's going to be a tremendous breakdown. I don't even know where it would go. We're being price discovery to the downside if it breaks this. So I would say if you haven't bought in yet, you'd be looking at the 1.620016 for a little consolidation. Maybe it comes around. Maybe this could be like the inversion starting. But the Internet of Things tokens, there's no doubt about it, they're getting demolished. Demolished. Maybe it does do something like this and then come back up and then bounce out. I don't know if it'll go that far down, but maybe it does do something like that. You know, maybe that's what it's destined for. Who knows? Or maybe it just comes down here, creates this, bounces out, comes back, bounces out. There's so many ways we could speculate. But we'll see, because that's definitely a scenario where I could see it. Assuming the market doesn't correct up. Like I said, this side of 8 o'clock is getting obliterated, which means probably at the flip we could probably be seeing something too. But no matter if we think it's a good buy or not, with the way the market conditions are, it's just getting obliterated. Obliterated. You know, things are getting absolutely demolished. So I kind of stick with what I know. Kind of stick to what I know. Isn't that funny though? How they liquidated that Ethereum position and the price is recovered all the way from, and it's higher than where the person bought it. And that's why I hate leverage. It drops conceivably $160 just so it can liquidate that 50x position. And now we are as if it didn't even happen. You know, that's the risk of leverage. It's very, very deadly. Oh, I agree. If MXC dropped to that level, it would be fire. I don't disagree with that. Don't disagree with that at all. What else? Oh yeah, Ethereum. Let's see what it's looking at. It's got to get back above that pivot at 1979. That's why I thought it was such a weird spot for that person to take a leverage trade out. It was just a weird spot. I wouldn't want to be opening it on that pivot line, that's for sure. And it's on the bottom side of that channel. Oh man. It did fill that exhaustion, so they're probably close. They're probably close, but that amount of money, there's no reason to take out leverage. They should have just took out a spot position, if I'm being honest. Save the bank. Bitcoin dominance at 62.1%. Just continues to rise. And it looks like a nice bull flag. It looks like it's going to... Remember, when we have exhaustion wicks down, it comes back to retest it. This is an exhaustion wick over the top. So there's a real chance that Bitcoin dominance, assuming it breaks 62.3%, this little flag could bring us all the way back up towards the top of the exhaustion at 64%. It just continues to move in favor of Bitcoin instead of the alt tokens. It's pretty amazing. We're dealing with a pretty amazing dynamic here. When you look at the total crypto market cap, we're up about 0.95%. We're right on the support line on this broadening. It feels like a broadening wedge here as well. But we're on the support line, so if this were to hold, you technically could come all the way back at 3.63, but it would take so much now. Because it's one thing to say it, but it's another thing to see exactly what's starting to transpire. So here you had this resistance drop point. So now you've essentially formed something like that it would have to break out. Then it can start to recover. So that's the total crypto market cap. But now if you look at it minus Bitcoin and Ethereum for the total three, so that's all crypto minus Bitcoin and Ethereum, it's outperforming the total crypto market cap. It's up about twice as much at 1.86% versus 0.98%. But a very similar style structure. We've got what looks like a broadening wedge. We broke down out of this little structure. It did not take the up route and form that W. It actually fell out. And that's the drop point resistance that you need to get back over and break this structure to go back to the top side to 1.05 trillion. But we got a very big resistance now at 837 billion. So there's so much stuff in our way now. Initially, we had it nice and open. But it does appear like these broadening wedges did take over. Ethereum, where we knew we were screwed, was when we fell outside the rising wedge. We talked about this in December, and this was our oh crap moment. When it came up here in December and got rejected, we had already put this out, but we needed to break this resistance. When it got hammered at 4,100 roughly, we knew this is bad. This is the exact indicator that caused me to sell most of my portfolio back in December. And I still have a large amount, but I sold 70% of massively in profit, like massively. And now you see Ethereum and it's dropped 53%. That is insanity. At the peak, it was down 57. I mean, we are officially in bear markets again. Like, if you don't understand what that means, even if you look at XRP, it's great. It's at $2.22. And you know I'm telling the truth because it's 222 during this talk. Bear market territory, so correction starts at 10% or more. And it usually lasts to about 20%. Bear market territory can be talked about at 20. Once it hits 30%, you're in bear market territory. I don't give a rat's ass what anybody says. XRP even right now is down 35.7% from the cycle top. That is bear market territory out the yin-yang. So when it looks like there's more red than green, no matter how much green there is, and it goes up and then it just cuts back, that's because the market's in bear market territory. So XRP in this bear market's at 222 right now. Most of the other cryptos have revisited back to near their lows. DGB's under 1 cent again. You know, a good 15% under 1 cent. You've got XDC back under 7. You got ZIL at 1.2, and that's only because of a 2.5% rise today. V-chain's basically in bear market at 2.4. It's back to that bear market lows. H-bar's fallen back into bear market territory, but yet it's still up a good 300-400% from where it was at. So some of them are still putting on decent gains. Algo's still up about 125% from its bear market. Same with IOTA. But we're nowhere near the last bull market. So that's the caveat here, unfortunately. But if you're looking at this while I'm still here, make sure you set yourself up. Make sure you have your exchange set up. And, you know, you don't wait for that moment of opportunity. You have it set up so you have funds available and you can do what you need to do when it drops. There's nothing worse, and I've seen it a million times and I'll see it a million times more, than wanting to do something, having the destination, having the decision made, but now you have to wait on the exchange to get everything situated. Get it situated now. BITUNIX, lowest spot and leverage trading fees, lowest maker-taker fee. It's where I put my most trust and faith in because it is the cheapest. I will take stuff from other exchanges, send it over there if possible, and sell it there so that I don't have to hit the fees somewhere else. Right now in the month of March as well, it's cumulative. If you trade futures, if you get up to X amount, you can get 800 XRP for free. It starts all the way down at 25, I believe, XRP you can get. And then if you send $1,000 and do one leverage trade, you get a $100 voucher. You do $500, you send and deposit from another exchange. Even I did this with $1,000 from crypto.com. Send it there, got $100 for free on one leverage trade, sold it in the profit, and just went right back into crypto.com, aside from the voucher. So you can obviously do that, or try to capitalize on your leverage trading. I think it's 100 million cumulative in the month of March on leverage trading, and you get the 800 XRP free. That's like a $2,000 value, and I know someone's going to take advantage of it, and probably is. So figured I would share that as well while we're still here. But I do have to go up soon because obviously I'm still at the hotel. I'm doing the best I can to put this content out. And we've done 46 minutes, so I'm very happy about that. Now, is there anything anybody wants to talk about real quick before I leave? You know, I don't know. The comments are coming in fully. I never can tell. Before I leave. You know, I don't know. No, they definitely are not coming in, I don't think, anymore. Because I don't know. I didn't see any of these comments. Yeah, the last comment I seen was the MXC to 0.0013 would be fired. Good evening, Ring Star. I appreciate, or Ringo Star, welcome in, and thanks for being in Tom's Army. I really appreciate that. Let's see. Newbie, welcome in. Good to see you in here, friend. The Find group, don't forget to like and share if you find Tom's content helpful. Absolutely. Absolutely. Thank you for that. Sorry, but nothing is inevitable with XRP. That's the same thing everybody told me when I was telling you to buy in the bear market, and inevitably it would break out. You know, it's lined up. It's the same thing now, whether it goes, that's why I started out. Do we have to go to $1.54 before this, or is it ready to take off? Well, if it holds $2.20.5, that's an indicator we're ready to move to the next layer. Now, the inevitable move up, it's always inevitable, right? I mean, to say it's not inevitable, my friend, I think that's a misrepresentation. It's inevitable right now because it's going to happen eventually. Strategic wording of inevitable, but I like the conversation. I like the conversation. Tom, think about buying CRO. What you think? I think it's a huge... What, Crypto.com token? I own the CRO. I have it, and I bought a lot of it under 10 cents. Some of it with rewards was over 10 cents, but I have it for the Crypto.com Visa debit card. So, DAG, Constellation, or Corium. Let's see. DAG, I mean, had a great rise up, but just like most of the other ones, a nice inverted hammer right now. But the problem is on the daily is that we're underneath the 200. We have a death cross. We've gotten rejected at the 200, and now we're back below the 100 or the 20-day, which is not a good sign on the death cross. Nice W reversal here, though. So if that can hold the Gartley, it would be beautiful. But nothing is certain until we can get out of this area. And now we're back down to this basically, I don't want to say it's a make it or break it formation, but you really don't. This is where you've got to hold this back test, where you're going to start to recross here, and then we can start working on the daily. So this is a very big moment chain for DAG. Very big moment. It's just like this for the rest of crypto. Now in the 4 hourly, I can tell you that's a bearish engulfing candle. So you're going to have a little bit of pain here. Maybe it does get held at 4.3, but there's going to be a little bit of pain here with the bearish engulfing candle. Oh, hi, Mom. So we've definitely got to work on that and get over 46475 at some point as well. And then ultimately retake the 200-day and the daily. Hey, you got to retake the 200-day and the daily at 493. So that's for DAG, but changes that's the best I can tell you right there. That is the best I can tell you right there with DAG. And then Corium down 3.2%, sitting at 11.89 cents. Corium's in another spot where we have this big death cross in the daily. Got rejected at not only the 200 but also the 20-day right now. And that pivot point of 11.5 cent chain, that's there for a reason. We never retested the fair value gap down here after a breakout. So, I mean, I would not be surprised if this broke down us to come back to 7.1 and have like a 35% drop. That's where we're at right now. You know, that could be a 40% drop. So, we'll see. We'll see. We're at the make it or break it point for many cryptos. Many cryptos. Not just XRP, many cryptos. And I love those pivot points because even if you don't understand TA, you can understand a pivot point. If it breaks that, not good. If it holds it, excellent. Excellent. But before I leave this emerging markets fund, remember it's delayed, so we got to watch it from a delayed perspective. Oh yeah, I can't see it right now because it's delayed. Duh. Maybe we can look at it like this. But it is delayed, so we hope it was useful. We're always focused. Yeah, I hate when they're delayed because it makes it harder to see the info, but this is not meant to move. It's not going to move a lot. It's more of a percentage based. In the past year, it's up 4.39%. Past 5 years, it was down 10.5%, which is great. But the emerging markets are outside the U.S., so now that hourly, I mean, the 1 year, you can see how that was kind of a little bearish there. That's at the top. So this is like a year over year kind of thing. So, but yeah, that's what I got, everybody. I'm going to go. My mom's here, and I'm going to go talk to her and, you know, see what's going on upstairs. My son was getting fed, and now it's time. So have a blessed evening, everybody. I'll continue the conversation in Telegram some. That's been a great thing as well. I love seeing all of that. But yeah, this is what we got today. I did exactly what I could do today. I've got obligations, and we will, yeah, she just came and said hi, so I know she's here. So, God bless everybody. Don't forget to give thanks to our Lord and Savior Jesus Christ. Remain humble, show humility, and don't let your emotions dictate what's going on right now. There's a lot of stuff happening, a lot of odds and ends, but right now XRP over $2.20.5 is a good close. So in the next hour, we're looking to close over $2.20.5. If we can close that, the next layer up would be $2.32, and then after that we would have $2.44 approximately. So that's where we stand. We'll continue this conversation later. I appreciate each and every one of you. Have a